Good morning. It's coffee and tea with Travis this morning. I'm double fisting it today. It's Friday. Let's party it up. Today is October 24th, and the markets opened ugly this morning. Actually not quite as ugly as they anticipated. There's a Fed futures that they actually kind of bet on what the market's how it's going to perform when it opens, and it was maxed out at 550 before open at 6:30 Pacific time, and it went ugly real quick. It almost peaked at 500 down, and it's hovering right around 300 down right now. And the reason for this is last night, Japan, yesterday, or last night for us, their stocks in some big companies like Sony and Samsung showed really bad earnings, and so it caused this ripple effect when China's markets opened and then into the European markets, and just big sell-offs. England feels they're facing a recession, and our dollar is climbing by the day in value. We're at a 2-year high. The U.S. dollar is against most other foreign currencies right now, just because we're not quite as bad as some of the other countries. As surprising as that may sound and may not feel like in your own pocketbook, but the reality is this is a global economy, and this has really impacted the world more than we probably realize. With that, oil was down even $4 this morning. It's come back a little bit, but we're at $65 a barrel compared to $167 back in July. So we've dropped $100 in less than 3 months, or 4 months now, I guess. So that's great news. And the reason is it's not so much that there's lack of production, because the other scare yesterday was that OPEC was going to meet yesterday and today and reduce the amount of oil they are processing down to, I can't remember the number, it's like 1.5 billion barrels or something, some astronomical number. But that fear was if they stop or slow down production, it's going to cause prices to go back up. Even with that announcement yesterday that they were cutting back, it still dropped $4 this morning. And it comes back to the fact that oil is sold on a global level on U.S. currency. So as long as U.S. currency keeps jumping in value, keeps climbing, we're going to see oil prices continue to drop and drop and drop. So that's great news for us. I mean, if we can get it down to $50 a barrel, we're going to see low twos back at the gas pumps again, which will be amazing to fill at the pocketbook. So that's good news. The other good news is that existing home sales reports came out today, and it's at a 13-month high. But it's a little bit deceiving, because the unfortunate news is so much of these sales that are taking place across the nation, that all these new homes are being sold. Again, it's existing home sales, not new home sales. Difference, not construction. These are homes that have already been built and people have been living in. The reality is that they're either foreclosed homes or short sale homes in a lot of cases. Depends on what market you're in. If it's in San Diego or California, the Southern California area, it may be 75% of those sales are short sales or foreclosures that people are getting great deals on. But again, it's just home values are dropping, and it's causing people to see the great deals in these things, especially as investments even. But I heard a report this morning that they're saying most of these are owner-occupied homes, which again creates stability in the market, creates stability in the neighborhoods they're buying in, that they aren't investor homes, and that people actually mow their lawn when things go bad and all those other things. So good news for existing home sales. A little bit of side note on that. Oil's down, but again, we're about 300 down on the Dow, and we're about 50 basis points down on mortgages this morning, which is not good news. That creates about a quarter difference in your mortgage rate. So a quarter worsening if we're down 50 basis points. If we're down 100 basis points, that's a full quarter. Not an eighth, I'm sorry, there's an eighth difference in your rate. So rates are about an eighth worse today so far, but it's a moving target today. It could come back or worse, but we did bust through that important level of support, like I mentioned yesterday, a 200-day moving average. If you get below that level, then it's kind of a free fall to the next level. And we busted through the 200-day and the 50-day moving average, and so we need to find a level of support here coming up. So hopefully it'll retreat back to where it started this morning, and we won't close on an ugly Friday. So outside of that, I hope you have an awesome Friday and a great weekend ahead. We look forward to serving you, and be blessed.